Welcome back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC readings, the formula where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have a SIRIUSPOINT LTD, ticker is SPNT. Price at the point of filing is $5.92. Let's get right into it. This is not a recommendation, not advice. Please do your own diligence before investing into anything, and let's begin. Description. This is a relatively simple arbitrage situation stemming from the merger of Sirius International Insurance and a Third Point Reinsurance, which closed in 2021 and created SiriusPoint, SPNT. At the time of the merger, investors had the option of electing to receive a contingent value right, CVR, maturing on the second anniversary of the transaction. February 26, 2023. The CVR will pay out cash proceeds equivalent to 13.73 less 0.743 times the price of SPNT common stock. The CVR was listed in trades under the ticker symbol SSPCF. At the effective time, the company entered into a contingent value rights agreement, the CVR agreement. Pursuant to the CVR agreement, the company issued CVRs representing the right to receive a contingent cash payments of 1. In the case of acceleration upon certain breaches of the CVR agreement, $13.73 minus the volume weight average price of the company shares measured over the 14 consecutive trading day period, beginning on the date a branch is declared, multiplied by 0.743. Second, on the second anniversary, the maturity date of the effective time, $13.73 minus the volume weighted average price of the company shares measured over the 14 consecutive trading day period prior to the maturity date, multiplied by 0.743. And third, in the case of redemption by the company prior to the maturity date, the discounted present value of $13.73 discounted from the maturity date to the last day of the 14 consecutive trading day period beginning on the date of the redemption notice. Redemption valuation period minus the volume weighted average price of the company shares measured over the redemption valuation period multiplied by 0.743. At current prices of $5.92 for SPNT and $8.85 for SSPCF, the two securities create an arbitrage at a 3.8% gross yield and a 20% annualized yield with 69 days left until maturity. The trade is constructed by purchasing 0.743 shares of SPNT for each share long SSPCF. Note that in this situation, one creates the arbitrage by purchasing both of these securities long because SSPCF itself serves the function of the short leg. Base is $13.72, SPNT $5.92, factor 0.74, value SSPCF 9.3466, SSPCF 8.85, return 0.4966, capital 13.2234, gross yield 3.8%. And date 26 February 23. Current date 12/19/2022, 13/32. Days to expiry 69. Annualized yield 20%. There's extremely low risk that the transaction does not close. With approximately 5 million of the CVRs outstanding, the total cash outlay to satisfy the CVRs at today's prices is slightly less than $50 million. As of a third quarter, SPNT had a balance sheet with $2 billion of equity, $650 million of unrestricted cash, and $5.7 billion of investment holdings. Thus, payments is not a major balance sheet event for the company. This is not an optional payment, but a contractual obligation pari passu to unsecured debt. SPNT is hardly a stellar insurance company, but is rated A- by AM Best, S&P, and Fitch. With only 69 days to go, the probability of a major balance sheet hole emerging in their book, which would limit 50 million of balance sheet flexibility, is de minimis. Catalyst, wait until February 23. Thank you very much for tuning in.